Okay. Hi, everyone. Sorry. Hi, everyone. Thank you for joining me today, Monday, October 11th. Today's trading room session. As always, just a quick disclaimer. This trading room is for educational purposes only. Anything I, say here or analyze is my own opinion, not a trading signal to open or close any trade. And of course, any question you have, I will answer, but not as a trading advice of any sort. So of course, manage your trades and your risk at your own discretion. And I'll be happy to answer any question you have. Just type it in the chat box. You can share it with the hosts and panelists so that everyone can see it. And of course, I will go over the majors and some other crosses as well. And any additional analysis or any other question you may have, feel free to post it and ask me. I'll start by just going quickly over the yen pairs, because last week on just last Monday, I don't know if any of you was here last week, but I was highly recommending the yen crosses, especially Swiss yen, but actually all of them went up very nicely. But I said that yen crosses are showing some very, very nice strength or nice potential to the upside. And I'll start with Swiss yen because, again, I'll show you how I was analyzing the chart and how my process of analysis and thinking. Basically, what I said is that the Swiss yen on the monthly chart, after testing this resistance line for several years, as you can see here, okay, we had this resistance line already back in 2014, and then again in 2017 and 18, and last year, 2020, and it broke above or breached above this trend line, and the moving averages started opening up, forming a bullish trend or an uptrend. And after it broke above it, it started consolidating and moving sideways on the monthly chart. And I mentioned last week, which was, I think, the first Monday of October, I mentioned that that the monthly candle of September formed a sort of a hammer on top of the moving average, in this case, the 9 moving average, exponential moving average, in what seemed to be a continuation pattern to the upside. So a breakout above a long-term resistance line, a sideways movement. We can also see it on the weekly chart, a sideways movement, reaching the previous resistance, now becoming a support, forming on the monthly chart a hammer on top of the moving average. So it's all sort of a confluence of signals, as I like to call it, and it really started moving up this week or already last week. And on the daily chart and the 4-hour chart, what I mentioned, I drew this line last week, this trend line, and I said that once this trend line is breached and retested, it can form again a support line and give you a nice signal to the upside. So it was on the hourly chart, and last Monday was October 4th. It breached but didn't close with 2 candles above it, above the trend line, this blue trend line. It closed only with 1 candle and immediately retraced back. tested it for a few more days, but eventually started going up. And of course, the higher time frames, which are stronger and more, solid and trustworthy, excuse me, eventually it broke above it, tested it, and with the moving averages started pushing higher, and it goes for pretty much all yen crosses and gave a very, very nice move. And I mentioned two potential levels as the target. The first level, this midterm level here, which you see was tested very shortly, like just a candle or two, and then immediately broke up. And I mentioned that the again on the daily or the 4-hour chart, the next target is this supply zone. Okay, and this supply zone is almost touched now. So even if you take the trade from here, it's about 200 pips with a stop loss of somewhere between 30 and 100 pips, depending on the time frame you're entering and where you or how much risk you're willing to take with a with the volatility. But basically entering anywhere around here after retesting the trend line and placing the stop below the previous stop, below the previous low, below the moving average, even the 50 moving average, gives you a risk of around 50 pips, initial target of around 90 pips, so much more than 1-to-1. And of course, the second target is over 200 pips. And this is just the beginning. I remind you, this is the bigger picture. And the bigger picture is that we have a multi-year resistance line breached, retested, reversal candle to confirm the to reaffirm the continuation pattern. Okay, this pin bar, and the moving averages all supporting a long-term upward movement. Where is the bigger target or the high-level target? So obviously we have this big supply zone around here, which is like at least, I don't know, 800 to 900 pips away. But this is on the monthly chart. Of course, we have other resistance areas here and here, and resistance lines in here as well. And of course, on the weekly chart, we can find more levels of resistance even here. So it's not like it's going to move, I don't know, 900 pips in a few weeks directly or quickly, but it gives you the high level direction of the market. And if you are swing traders, definitely look for entries with the same principle of waiting for a breakout, a retest. Let's have a look at the monthly chart, but it's the same principle at any time frame. A retest or several retests of, let's say, a resistance line, eventual breakout, a retest of the breakout. If you have confluence of signals like, a reversal candle or a confirmation candle, if you have moving averages, if you have multiple support signals to the upside, this is perfect. And of course, you can take it on any time frame. Here we had this trend line, breakout, retest, and continuation, especially with the push of the moving averages. I remind you, when I look at a breakout, I always wait for two things. First of all, I want to see two candles closing above the resistance line if it's a breakout to the upside. So two candles closing above the resistance line. Let's say we have this one here, 1, 2, okay, or here 1, 2. But after the breakout, after I have two candles closing above the resistance line, the second thing I want to see is a retest of the line, is a candle coming back and retesting and still closing above. So in this case, this candle went back but closed below. This negates or resets the breakout. Now I have to wait again for two candles closing above. So let's say 1, 2. Here I have another one, another retest, another retest, and another retest. So any one of these candles for me is a signal to go long after I have a breakout or two candles closing above. Of course, you can always try to enter at the when the price touches the resistance line, which turns into support line, but it's not as safe and not as valid as waiting for a confirmed candle closing above the line once it touches it and retests it. So breakout, two candles, retest by touching the line and still closing above it. Then you have a confirmation. Then you can go in, let's say here or here or here, with a stop loss. It depends on the volatility and on the strength, but basically the safest stop loss is below the previous low. You can still place a stop loss a little bit below the line, but it's not as safe because there can always be another retest that takes out the stop loss and goes back above the line. So, as I mentioned, yen pairs are introducing some nice opportunities to the upside in the coming days and weeks. Here we have sort of a double bottom or triple bottom. Okay, we apparently are going to close above this supply zone. So again, if the price closes above, let's just make it a thicker line. If the price closes above this line, two candles, retests, and shows you close above this trend line, at this support line, it's a perfect setup to go long. Obviously, before you go long, you always look for the risk-reward ratio to see how much further the price can go, to make sure that you're not risking more than the potential profit. How do you know the potential profit? By looking at the next level of supply or demand. In this case, for example, here is the next level of supply, not the strongest one, but still it's there, but it's a middle, it's a mid-level. Another level is right above here, and of course the topmost level is the final target. But still, let's say you enter somewhere here with a stop loss of around, let's say 40, 50 pips, and the target is 100 pips above. That's a good risk-reward ratio. Okay, so that was just a quick summary of what I mentioned last week with the yen pairs. Let's now go over some of the majors, review them, and see what we could expect for the upcoming week. So obviously, as you can see, dollar is overall across the board is quite strong against euro, against pound, against other currencies, against the yen, of course. So the euro dollar is generally in a downtrend. It closed two weekly candles below previous support. And as I mentioned last week, the trend is a downtrend because we have lower highs, lower lows, and we close below this this previous low. We're in a 52-week low here, or almost. I mean, last week was a 52-week low, and generally the trend at the moment is still bearish. So these are the this is this is what you should be looking for if you're trading euro dollar, at least mid to long term, is to look for short opportunities. Now, let's have a look at the 4-hour chart, the 1-hour chart. So we have some consolidation now, and the daily chart is consolidating still below the 9-week average. It closed below previous low, okay, still moving sideways. If I look at the stochastic, and probably if I look at other indicators as well, or oscillators, there is a slight bullish divergence, but not a very distinct one. So it's, you know, it's a divergence, but not something that I would give much weight to, because it's not a very, it's not a clear divergence like the one we have here, okay, where we have two distinct lows and very clear higher lows in the oscillator. Here, it's just moving a little bit upwards, but it's not showing two higher lows as we see in the previous divergence, which obviously also gave a nice reversal. So the trend is bearish, and if you're looking to go short, I would look for short opportunities on euro dollar anywhere or anytime it closes below this trend line or closes below below this demand zone. Okay, so pay attention. Even if it closes below the trend line, it could still find some demand or some support around here, retest the trend line, and only then maybe go down. If you're looking for safer opportunities to go short, you can try to go short around previous areas of supply or resistance. You can see here some support and then turning to resistance. If the price goes back here and forms a reversal pattern, then you can try to go short. And it looks like, you know, we have some sort of a downtrend or a flag with this channel here. Okay, but as long as it remains below, you know, below this resistance line, below the channel or inside the channel, and starts going down, the trend is intact. And again, for now, euro dollar is showing clear downtrend, and either look for short opportunities in previous highs or wait for a breakout or retest of maybe the trend line or previous lows or demand zones. So that's for euro dollar. And if you're asking Ritik if you see a sell on the H4, yeah, basically, again, there is the trend is short. As for the entry, you know, entering here in the middle of the range is, I think, a little bit too early. Either enter at the top of the range or wait for a breakout to the downside. Pound dollar, also, I mentioned it last week, and I will go to pound Swiss later. Pound dollar, I mentioned this sort of neckline because it's not a formal head and shoulders. Head and shoulders should have either a horizontal neckline or an incline, rising neckline, and not a declining neckline, not for the regular head and shoulders, only for the inverse head and shoulders. Yet, it still gives the feeling of a reversal pattern, and the pound dollar is also in a downtrend on the weekly or the daily chart with lower highs and lower lows. Look at the daily candles. Basically, I mentioned last week that I would be looking for a short opportunity around this line if I see that the pair is testing and closing below the trend line. Basically, it tested it once, it tested it another time and closed above, and then went down. Look at it here. It a couple of days ago it closed below, again closed below, and today's candle also looks quite bearish. So again, around this horizontal, this resistance line or support line, previous support line, if you want, you can start looking for short opportunities, because again, it feels more bearish than bullish at the moment. But I would be waiting for a clear signal, not entering here when it's just kind of ranging upwards is a little bit risky. I would prefer to see either this daily candle closing below this support or resistance line, or waiting for a clearer reversal pattern. But again, the sentiment, I think, on pound dollar as well is bearish, just like euro dollar. And while euro dollar already closed or gave us a close of 2 candles below the previous low here, just delete this. Okay, previous low, it already closed 2 candles below. Pound dollar, if we're looking at the previous low, it closed with a clear bearish candle below once, and then retested it again. So it's still a good sign, I think, for the downside. Just wait for a better place to enter short, because looks like you can see the sideways movement and the long daily wicks. So it's kind of hard to place a stop loss or a safe stop loss if you're trading the long term. And on the short term, it's still quite noisy. As you can see, the trend is not very clear. So yeah, Stefan, I'll get back to Swiss yen and see where the opportunities are next. Yeah, there could be a good drop. Let's have a look at the drop in the yen crosses can come either from dollar yen, which we'll look at now, or from the euro, the pound, the Aussie, the Swiss, etc. Soon. So let's have a look at the dollar yen, which will obviously affect the yen crosses as well. Excuse me. As you can see, the dollar yen breached and started moving up. I mentioned it also last week with these candles that showed, momentum to the upside, especially with these moving averages pushing higher and higher. But pay attention to this supply zone above. It's not too far away, just like, I don't know, 50, 60 pips above. It gave a short or pushed the yen quite sharply down at the end of 2018. During October, I don't know if you remember, but during October and December of 2018, there was also a sharp drop in the stock market, and the indices dropped. Everything pretty much went down at the end of 2018 as the Fed was tapering the QE4 or whatever it was back then. Usually when the stock market goes down, there's a flight to the safe haven, which is the dollar and the yen. In this case, the yen gained strength when the markets went down, and that's why we see the drop here at the end of 2018. And then, of course, the Fed, because it saw that the markets were going down, it said, okay, no taper or whatever, or QE will continue or whatever, the interest rate, blah, blah, blah. And the markets started going up again, and the dollar yen went up again. Now, who knows? Maybe it will soon get back to the supply zone. And obviously, we'll have to wait and see. No one knows. Either it forms a reversal pattern here and start going down again, maybe along with the markets that showed signs of weakness in the last few weeks and formed some bearish engulfing candles as well, or it will continue higher and try to go higher to the next supply zones, the higher levels, and then obviously we will see the yen pairs pushing higher as well. But again, we'll have to wait and see. It's not too far away. I'm sure this zone will be tested in the next, I don't know, well, few days, probably this week already. It could be tested. So pay attention if you're long on any of the yen pairs or crosses. Just pay attention to the fact that it could show reversal patterns and signs of weakness in the coming days. As for the short term, if you're looking for short-term opportunities, obviously the safest ones are around breakout levels and retests, or around the moving averages, for example. Okay, so you have a strong uptrend, you have a retest of the moving average, a pin bar or a hammer, and an entry above this hammer or above this previous high with a stop loss below the hammer low or below the second moving average, which is always a safe zone as long as the price remains above the first moving average, the short moving average. So this is a safe entry to enter with a, I don't know, 19 or 20 pip stop loss, because you're with the trend. And I know it's a cliche, but as always, the trend is really, really your friend. And entering when the trend is so strong and all the yen pairs, for example, the yen crosses are showing such a strong momentum, entering with the trend is the safest thing to do, especially after we have a confirmation candle such as a pin bar or a hammer. So what is your next opportunity? Again, to go long once the moving average is retested. Obviously, if you have other retest zone, let's say that the yen goes all the way back here, okay, and retests previous sideways zone and retest the moving average, in this case, the 20 moving average, 20 or 21. So this is a good place to, if the price goes back here and forms a reversal pattern or gives you a confirmation candle, then you can start looking or enter long with a relatively high probability to be with the trend and to continue to the next level or the next target, which is not too far above. So let's see here. Let's say you enter around here. Okay, moving average, previous well, sort of consolidation or support zone. You can see it here. By the way, it can always just retest this line here, this zone here, or this zone here. But wherever you see a retest, you see a place where the price consolidated or started making the next leg up, and then you have another support from, let's say, the moving average. This is a safe zone to enter. See where you can place your stop loss. Let me just bring back the areas I deleted. Okay, so let's say you enter here and your stop loss is just below, let's say even 20 pips, but your next target can be something like 90 pips. Okay, that's a great risk reward ratio. You're with the trend, your risk reward ratio is good. Take the trade. Okay, but wait for a confirmation candle. Wait for the price to retest and give you a confirmation, just like here. Okay, don't just enter anywhere. I can tell you that I saw a few accounts that have been wiped out just because they were going short on dollar yen. Don't go against the trend, not when it's so strong. If you, well, obviously, if you didn't place a stop loss, you're in trouble. But if you place a stop loss, don't, you know, don't try to revenge trade. Don't be don't be like stubborn and go against the trend. You're taken out. Take the time, review the chart, tell yourself now that you're out of the trade, okay, I'm out of the trade. I'm not biased anymore. What is the trend? Where is everything going? What is the stronger currency at the moment? What should I do? What are the signals? What are the moving averages, etc.? And look for these opportunities. It's so much easier than just banging your head against the wall and trying to move the wall. So that's for the dollar yen. That's my trade setup to look for these previous consolidation or support zones, especially with the support of the moving averages, and enter upon consolidation or a reversal or confirmation candle. Dollar Swiss is, as I mentioned last week, is the trend is not very clear. The Swiss currency is quite strong. So you can see that unlike the dollar yen, which is going up, the dollar Swiss is actually pretty much going sideways or even down. And that's why the Swiss yen is so strong, because the Swiss is strong, the yen is weak, which makes the Swiss yen a perfect pair to the upside. So dollar Swiss is still going kind of sideways with, with some with some weakness or sentiment of weakness. You can see the the divergence here as these highs were going higher and these highs were going lower. So this is also a sign of weakness on the dollar Swiss, which makes the Swiss currency quite strong. So Swiss yen to the upside. As for pound Swiss, that I was asked about, now that we've reviewed pound and Swiss, pound dollar and dollar Swiss, let's have a quick look. Yeah, so look, I always say that, and I'll continue saying that. When I see a chart like this, I close it. I don't know what to do with. I mean, yeah, you can look for the bottom or the top to trade, the channel, but you see, it's the trend is so unclear. Why even trade it when you have beautiful things like this? When you have pairs that show clear trend, clear strength, or clear weakness, why bother with something that is so noisy and so unclear? So I don't know, Ritik, what to tell you about pound Swiss. For me, this is not tradable at the moment. I mean, yeah, look for clear trends where you see the moving averages open, when you see a retracement to the moving average. Can you when you see, for example, a breakout and maybe a retest? Here it didn't even retest the breakout, but a breakout and a retest, then look for an opportunity. Now, yeah, lower time frames, yeah, okay, on the 5-minute chart, the trend is the trend is short, but now you're reaching this demand zone. So just just pay attention, not to. I mean, if you're in a trade, if you're in a short trade, maybe start moving your stop loss lower, trail your stop, maybe take partial profit. Of course, if it breaks below, if it goes below below this area, you see here we had resistance, support. If it breaks below it, wait for a retest and then continue short. If you're long, obviously close the trade. But here we already have some sort of a demand zone, and you see that it gave a nice move to the upside. So again, short-term trade, if you really want to trade this pair, either wait for some reversal pattern like an engulfing bullish candle and go long, or wait for a breakout to the downside, a retest, go short, and that's it. Okay, let's quickly discuss dollar CAD and Aussie dollar. So dollar CAD, I said last week, since crude oil is going up and the Canadian dollar is commodity, gaining strength when commodities are strong, especially crude oil, then I said we should expect strengthening of the Canadian dollar, and indeed the dollar CAD, the US dollar against the Canadian dollar is going down. And yeah, when I say, Enrique, closing candles, I mean consecutive. Yeah, I mean 1, 2, not one and then going up and then another one after a few candles closing another candle. So if it closed below one and then another one, um, this is what I want to see as a confirmation. So as you can see here, yeah, we had this previous low, 2 closing candles below. If there's a retest of this line, of this previous support line or resistance, well, we can draw this here or here, a retest, and then maybe a continuation to the downside. And again, crude oil, if any of you is trading commodities, if any of you is trading crude oil, and crude oil is very strong, maybe I'll show a chart at the end of this trading session and give you a quick analysis of crude oil. So trading opportunities on dollar CAD is definitely either a breakout of this temporary low or a retest and a confirmation or a continuation candle to the downside. Obviously, if the dollar CAD closes above this this resistance or support line, then we need to wait for another breakout to the downside and restart the counting. But you can see here, like strong candles to the downside. And yeah, I mean, looks like, you know, it came up from this demand zone, but if it retests this demand zone, maybe, who knows, but maybe it will break down. If it goes down, I don't know how much crude oil will appreciate, but you know, gas in gas stations will be very expensive. I really don't want to see that. So that's for dollar CAD, and let's have a look at the Aussie dollar, which is actually showing some nice strength. And I mentioned last week that it's kind of stuck in between these moving averages, and we'll talk about Kiwi, which I think is stronger. But Aussie dollar now is breaching and going to the upside, and to the short term, the trend is strong. You can see here a breakout of this zone. We had this zone here. Okay, previous lows, retest, breakout, and again resistance, and now breaking up. So this whole zone is now breaking up to the upside. You can see a retest. You can see confirmation or a reversal candle, moving average, and continuation to the upside. Target. So I think the next target could be around this resistance line, around 0.74, and even higher. It can try to reach or maybe even break out this previous high. Again, Aussie dollar and Canadian dollar are both very biased towards commodities. And when commodities go up, these two currencies, Aussie and Canadian, the loonie, usually go up as well. So yeah, probably next target is 0.74. And again, the short term, if you're looking for opportunities, just wait for a breakout and a retest. So for example, let's say you see here that it broke up above this line or around here. If it comes back to this area or this area, just wait for the confirmation candle to re-enter, especially with the moving average. So let's say it does something like this, and here maybe a pin bar or a spinning top or a doji or something like that to show you like the reversal candle and move to the upside. That's the perfect way to enter with a stop loss somewhere around here, or even, yeah, like somewhere even below this previous low is safe. Of course, safest is here, but that's too far, especially for such a such a short time frame. But this is the best opportunity to enter, or the safest. And so that's for the Aussie dollar. Again, looks like strong. Obviously, pay attention to this area around here as a temporary or intermediate supply zone, but I don't think it's a very well. It could show you some resistance. Okay, you can see here these two strong candles coming from this area. So just pay attention not to enter long exactly here. That's why I said wait for a retracement, which will give you also a better risk reward ratio, so that even if it turns around here and you take partial, you have some profit, and then if it turns around, at least you come out with some profit and a break even at the entry point. Kiwi dollar, well, actually, I remember it was stronger, but maybe we have a reversal pattern around here. The midterm trend is not clear. You can see here lower lows, higher highs, kind of moving in a range. So it's not very clear. At the moment, I wouldn't trade this pair. Yeah, you see, even the short term is not very clear. Just a sideways movement with some, yeah. So not much to say about Kiwi dollar at the moment, not in the short term, not in the long term, unfortunately. Euro pound, there's still some consolidation around this demand zone, and you can see, well, that it came back from, I mean, the overall trend is still kind of bearish, and it could break down below this support line to the next demand zone, but somehow it still finds support anytime it comes back to this area. You can see here some consolidation, some very bullish divergence. For those of you who are, I don't know, trading this pair for some reason, you see here some consolidation. I would wait for two things, two scenarios. Either it breaks below this support line, okay, this support line around 0.847. So either it closes below, okay, with a retest, a small retest, and then I would look for an opportunity to go short, or like take a short trade all the way down to the next demand zone. That's one option. Or if it continues the consolidation and starts going up, starts going above, then anywhere, if it starts closing above this trend line, or if it closes, even preferably starts closing above initial close above this previous high, this resistance, and of course, if it closes above this area, then I would start looking to go long. And when I say start looking for long opportunities, it means, again, a breakout, a retest, confirmation with a reversal candle, and entry. Breakout, retest, and confirmation. So, okay, so again, for example, breakout, retest, confirmation, and entry. Entry just above this candle or at the close of this candle. To the downside, again, to the downside, a breakout below, retest, some reversal candle of some sort. It can be a doji, an evening star, a shooting star, whatever, but something that should close below. If it's, for example, an evening star or a doji, I would enter just below the low of the candle. Okay, a shooting star at the close of the candle to the downside, stop loss above previous high, something like here, and the target all the way down to the previous demand zone, which is, like I said, around 100 pips below. Okay, this demand zone here. It's a big demand zone, but it could definitely be reached and it's not too far away. And as I mentioned, euro dollar looks more bearish than pound dollar. So euro pound can definitely continue moving lower. Again, we'll have to wait and see. So yen pairs, again, for now, very bullish. The trend is bullish. You can see here potential breakout of this double or triple bottom on euro yen. How to enter these pairs? Wait for a retest or a retest of the moving average, a retest of previous resistance, and again, here, for example, you have some consolidation, a breakout or retest, in this case, not of the support, not of the resistance line, but of the moving average. And if you're, if you're, you know, if you want to, if you're a trader that likes to take more risks, then things like this, you know, where the price consolidates and start giving these pin bars to the upside, you can start taking like small positions, starter positions, just above these pin bar, for example, here, or wait for a confirmation candle. So just at the end of the confirmation candle with a stop loss below. Okay, it's a risky one because you're just below the resistance line. But if you think, okay, that the breakout is coming and you want to take the risk, a small risk, you can take the small risk. Worst case, it goes down, takes your stop loss. But if it's a very small position, a starter position, and you don't want to be left out, then you can start taking it, you know, around these candles, especially when the trend is so strong. Otherwise, you can wait for a breakout or retest and an entry again. So that's the entry for the short term. And you see already the Swiss yen has reached the target or the supply zone. So I wouldn't enter here, obviously, because here I would expect some resistance at this supply zone around here, you know, where the candles meet. So this is a potential resistance area. If you want to enter long on Swiss yen, let's just have a look at the dollar yen now. No, it's still still has some way to go to the supply zone. So maybe, you know, it's very possible that Swiss yen will push higher. Who knows? In any case, I wouldn't enter right here. I would wait for safer areas. Here, wait for a retest and a continuation. Or, you know, if it continues higher without stopping, just, you know, it could come all the way up to the decision point here inside the, this is the decision point. Let me just show you. Okay, it could continue all the way to the decision point. This is the decision point at the top of the candle inside the supply zone where the move started. Okay, this is decision point. Another potential point, not as strong, but still a potential one, is around here. Let me just change this line. Another one is here, okay? Like the previous sort of shoulder, it's like a Quasimodo, okay? It's like a shoulder, a small head, like a breakout, but eventually a break to the downside. So this area around here can also be or become a potential resistance. Okay, so any one of these areas should, you should pay attention to these areas. By the way, you can see here, this line or this area of resistance here was retested again here. Okay, so I always look at the left shoulder before the strong move. There's always like a left shoulder that is also a potential resistance area when the price comes back to it. All right, so that's for Swiss yen. Again, obviously for the long term, the trend is very, very strong to the upside. Pound yen as well. Okay, the long-term target, which is not too far away again, is this area of supply. Aussie yen still super strong, potential resistance around here and also to the upside. Okay, so that's for the yen pairs. Just again, don't enter anywhere. Don't just go long anywhere. Wait for a retest of previous breakout areas or previous resistance zones. Okay, Euro Swiss, as I mentioned, is coming back to this trend line. It's a very long trend line. It retested it once. It's retesting it again now. And if it breaks down below, it means, well, obviously that either euro dollar is crashing or the Swiss is gaining strength. And I remind you, there were talks about the Swiss National Bank intervening in case it sees that the Swiss currency is gaining too much strength. So be careful with Swiss pairs. If you're long Swiss, be careful because, the Swiss National Bank is known for its intervention, just like it did in 2011 and in 2014, or the beginning of 2015, actually. So here, so just be careful. If you're long Swiss, for example, long Swiss yen or short Euro Swiss, be very careful. But generally, the trend on Euro Swiss is short at the moment and very, very close to this trend line, which is being retested again now. One thing I have to say about pound CAD, last week I was asked about this pair, and I mentioned that the pound CAD could form a reversal or like an inverse head and shoulders, like left shoulder, head, and we were here last week, pretty much here. And I said, okay, it could form an inverse head and shoulders, and especially if it breaks above this neckline, but it never reached this neckline. And when you see a head and shoulders pattern and the right shoulder is not forming like a closed shoulder relatively quickly, if it's like moving sideways for too long, it means this head and shoulder pattern is not valid and is not going to, it's not a strong one, and it's probably not going to complete or to confirm itself. Okay, when the right shoulder is like moving sideways forever, that's it. That means head and shoulders pattern is just not going to make it. And if you entered long for some reason in the inverse head and shoulders, or entered short in the regular head and shoulders, and it's not, giving you what it's expected, if the right shoulder is not closing, not reaching above or below the neckline, just get out. Just get out, because it's probably not going to make it. Still, pound CAD is, as I mentioned, found around this, above. Well, obviously this demand zone is already gone. Okay, but this is an intermediate demand zone. The strong demand zone is here. Okay, this was drawn last week. This is the demand zone around here, and maybe it's forming a reversal pattern around here, maybe a bullish divergence, who knows. If you have a reversal pattern, like let's say a doji or a spinning top and a confirmation candle, maybe we can see pound CAD starting to move higher from here, from this demand zone. Who knows? I mean, it's not a very strong demand zone, because as you can see, it didn't move very strongly from this demand zone. We don't have an engulfing candle here. The move that came out of this demand zone didn't make any higher highs. Okay, not really. It didn't form like a strong move to the upside immediately. So maybe it's just, maybe this sideways movement will go or end and move to the downside. But still, you can see that it's a very long range that's been going on for almost 2 years, even more. So maybe it will, reverse again here. But on the short term, in the short term, just pay attention to this demand zone, which could push this pair a few dozens or even hundreds of pips before going down again. That's it for today. If you have any questions, feel free to ask. You're always also free to contact our support with any questions or needs or anything. Be careful with yen pairs. Here, you see, it touched this supply zone and found some resistance. You see this? Sellers are now maybe coming in. So that's why I say be very, very attentive to previous supply and demand. Winter plan. Well, Ritik, if you're asking about the winter plan, well, we are not going to call it a winter plan, but we are coming up with a very special and interesting plan, similar to the summer plan, a very cheap plan. I don't want to spoil the surprise, but very soon, by the end of the month, we will probably declare a new plan, a very cheap plan for all of you traders who are waiting for sort of a winter plan. So winter is coming. It's right around the corner. Okay. Well, again, all the details about this plan will be revealed very soon. So wait and see. But we're preparing something good for you. So that's it. Again, have a successful trading week. I hope you took some good information from this trading session. Trade safely, wait for the opportunities, wait for the confirmation, wait for the confluence of signals. Of course, manage your risk properly, trade safely, and may the gods of pips be with you. Good luck. Have a great week. Thank you. Yeah, and Enrique, if I have videos with the tips, well, yeah, basically, Enrique, if you're looking for videos with, conflicts of signals and various things I spoke about, yeah, look on our YouTube channel. There's, I think, one video called Patience Pays, and another one, I don't remember its name, but we have several videos. Look for the, look at our YouTube channel, and it's all there. All right. Thank you. Take care. Bye-bye.